While everyone is busy arguing about whether AI is coming for their job or dissecting Elon Musk's latest tweet, the foundation of the global financial system is quietly fracturing. The data reveals a massive shift. In 2000, the US dollar made up 71% of global reserves. It was the undisputed favorite. But look at the trend over the last 2 decades. Today, that share has slipped below 58%. Because this drop happened slowly, it never triggered the alarms. There was no market panic or breaking news cycle, just a steady, quiet bleed in the background of the global economy. But that silence is misleading. What we're actually seeing is the global financial system rewiring its own plumbing while the world is looking the other way. To understand the impact, you have to see that reserve status is the United States' secret weapon. It allows the US to borrow at significantly lower rates than any other nation, effectively handing America a financial cheat code worth over $200 billion every year. For decades, if a central bank in Brazil wanted to trade with China, they didn't have a direct option. They were forced to route the transaction through the York, using US-regulated correspondent banks like JP Morgan or Citi. This arrangement created exorbitant privilege. It gave the US total visibility into global trade data, forced the world to buy American debt to hold as reserves, and gave Washington the power to act as the world's supreme financial regulator. This wasn't a system nations chose because they preferred it. It was an inescapable monopoly because no other liquid markets existed for these transactions. That monopoly held until Washington began treating this infrastructure as a tool for foreign policy. It started slowly after the 2008 crisis, followed by sanctions in 2014, but the real breaking point arrived recently. In 2022, the US and its allies froze $300 billion in Russian assets and cut them off from SWIFT. This sent a chilling signal to every central bank on Earth. The financial system they depend on can be switched off at any moment if they go against Washington. This forced neutral countries to reconsider their dollar holdings. It proved that relying entirely on New York-regulated infrastructure was no longer just a business necessity, it was a strategic vulnerability. The aggressive use of the dollar as a weapon didn't just punish an adversary, it gave the rest of the world the ultimate incentive to build a backup plan. That backup plan is being led by BRICS. After expanding in 2024 to include major players like Saudi Arabia and the UAE, the group now represents nearly half of the world's population and over a quarter of the global economy. They are currently testing the UNIT, a blockchain-based settlement tool designed specifically for member countries. It uses a neutral unit of account, backed 40% by gold and 60% by a basket of local currencies. The strategic goal is to break the dollar's monopoly on price discovery. By pricing oil and other commodities in the unit, these nations can bypass the dollar as the world's primary reference point for value. To move the money, they've built mBridge. This digital payment platform allows countries to trade directly with each other, meaning no correspondent banks, no New York oversight, and no American regulatory choke points. These are highly complex, ground-up engineering projects. They are designed to route trade entirely outside of US jurisdiction. This shift is also visible in the physical world. Since 2022, central banks have been buying gold at the fastest pace in modern history, moving their wealth into assets that can't be frozen or deleted by a foreign government. We are also seeing high-level bilateral deals that cut out the dollar entirely. Brazil and China are now settling trade in their own currencies, while India has begun purchasing crude oil from the UAE using rupees. These physical and digital shifts are converging. Together, they are creating a functional trade network that operates independently of the New York-centered financial system. It is important to be realistic. Neither gold, more BRICS, nor digital settlement systems will magically replace the dollar tomorrow. The dollar still facilitates the majority of global trade. But the real threat isn't a sudden replacement, it's optionality. For 80 long years, the dollar's power came from the fact that emerging markets had literally nowhere else to go. That era is ending. For the first time since World War II, a menu of functional alternatives is coming online, allowing nations to choose their own infrastructure. The US dollar isn't vanishing, but its period of unchallenged forced dominance is fractured, because once the world has a choice, the monopoly is over.